Hey everyone, thanks for tuning in to our Master the Market segment. So last week was definitely one to forget, right? We had mortgage rates hit 8%, 10-year note hitting 5%. And there are several headwinds right now to interest rates and something you need to be thinking about. Number one, quantitative tightening. The Fed is shrinking the balance sheet, and as the balance sheet gets smaller, interest rates are moving up. It's a trend that is unsustainable. It's going to have to give at some point. Number two, debt. We're taking on debt. Deficit spending is going crazy. And this week alone, we're going to sell, the Treasury is going to sell $140 billion worth of Treasuries. And the Treasury Department will get their money, but at what price? At what interest rate will we have to incent buyers to come in and buy it? Number three, Asia. Japan and China, major holders of our debt. And they used to buy a lot of bonds. Now they're actually sellers. Why? To defend their currency. And if that were not enough, short sellers, the fourth reason, know all of the previous headwinds, and they're out there shorting treasuries, betting on higher rates, and making a mint. So those are just a few things that we're thinking about. And in this week, besides the war and oil going over $90, you have GDP coming out. It's probably going to be pretty good. And we have the Fed's favored gauge of inflation. So you got to watch all this stuff carefully. The good news is the Fed's not going to speak next week. And there's no chance of a rate hike right now in November, regardless of what the data has next week. It looks like that part's over. So I hope this finds you well. Have yourself a great week, and better days are ahead for sure. Bye for now.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.